Hi, everyone. Thank you for coming to the Get on the Road to Home Ownership knowledge presentation. I want to thank, I'm Vanda Crossley. I'm with EXP, and I'm also a loan originator. I have Donnell Thomas with me. She's with CTC Mortgage. She's a loan originator. I have Regina Webb. She is the expert credit consultant, and she's also a realtor with EXP Realty. Her business is called B Webb Home Solutions. I have Angela Austin. She's a home inspector. And Heron Burrows. He is a insurance agent. I don't have anyone for title yet. So if you guys know of any great title people who would like to be on this seminar, we would love to have them. We do this every fourth Saturday of the month. It's either going to be in person or it's going to be virtual. So let us know if you'd like to be in on that and get you on the road to home ownership. And hi, Ms. Samuels, thank you for joining us. And it does take a village to buy a home. So we need a lot of people. So a little bit about me, I was a college professor, fell in love with education after being in health information management, technology business for over 40 years. Then I got into real estate in 2016, and I still love educating and teaching. So now I am doing it just not health information, but I'm doing it with real estate. I learned a lot about the finance game, and I want to be able to share some of that because it is a game. And so other people that we need involved in this game of real estate, we need appraisers, I've mentioned title companies, CPA and tax people, and you also need your family and your friends' support to help you in this journey. Now, these are the things that we need in our life. We need health, we need wealth, and we need relationships. So all businesses strive to succeed and to solve problems in one of these areas. They're not in any particular order, but just think about all the businesses and what they do. So the American dream, this is what they say the American dream is, to have a home. But it is also, it represents financial stability. A home represents independence. You don't have to depend on your landlord anymore. You establish roots. You can grow a garden if you want to. You can raise chickens and eggs and anything else if you're not in certain HOAs. And you build a sense of community. Hopefully, you know your neighbors, you get to talk to them, and they're there all the time. So people aren't coming and going like in an apartment. And it helps you build wealth through appreciation of property values. My mother-in-law bought a house in 1960, she paid $19,000 for it in Chicago. And you can't even imagine a 3-bedroom house for $19,000. Well, I guess you could back in 1960. But now that house can sell for over $300,000. So now she's got money for her retirement, aging, medication, things like that. So it does help build wealth through appreciation. Rent versus buy. What do you pay for rent yearly? If you pay $1,500, after a year, you have paid $18,000. If your rent is $2,500, it's $30,000. So you are helping your landlord to pay off their mortgage, and you have nothing to show for it other than a roof over your head. So with the American dream, in some countries you can't even own a home, but in America you can. So I suggest everyone to own either a home or get some land. It doesn't even have to be a home. You can build some land. You're not making any more land, and you can put something on it later. It doesn't have to be a big $300,000 home. It could be a mobile home. It could be a tiny home, but it's something that's yours and you can pass down to your family. So if you're unsure if you want to stay in the city, that's when you keep renting. If you're sure, like, Houston is going to be your home, you're going to be here for the next 5 to 10 years, then go ahead and buy something. Now, the downside to buying is the upkeep. When you're in an apartment, you can call and make that appointment online. Hey, come fix my garbage disposal. Hey, the thing isn't working, the dishwasher's not working, and somebody comes and fixes it. When you have your own home, you have to do that yourself. But we do have resources to help you with that as far as home warranties. And of course, we want you to save a little money so that when these unexpected things happen, you have money for it, because things will break. Your roof is going to leak one day. Your furnace is going to go out one day. The foundation is going to crack one day. Electricity, you're going to need to upgrade that one day. It may be 10, 20 years from now, but it's going to happen. Everything breaks. So this is just a little scenario of the home buying process. Start with your real estate professional. You get your pre-approval, so we know how much house you can afford. You search for homes in that area, in that price range. You make an offer, you do your negotiations with your contract. Sometimes they'll reduce the price. Sometimes, you have to increase the price and ask for some concessions. Then once it's agreed upon by the buyer and the seller, then it's in escrow. That's when it goes to the title company. They do the research to make sure that the people that are selling it are the rightful owners. And then when you get it, that you're able to get title in that house. And after that goes to underwriting. They make sure that all the ducks are in a row. You claimed you made $100,000. They're going to verify that you make $100,000 and that you're still employed. And then you go to closing. So one thing, well, I'll save that for another time. Any questions about anything so far? No? Okay. So what does a realtor do? I'm sure you've seen for sale by owners, and people say, well, I don't need a realtor to sell my home. Well, this is true. They don't need a realtor to sell their home if they know what they're doing. But a realtor does a lot of things. I think there's like 184 things that a realtor does. I don't have that list in front of me. But one of the things we do, we find homes on the MLS that fit your criteria. We research the property. We make sure that the person selling the property is the rightful owner of that home, because there are instances where people will try to sell a property that's not theirs. And a realtor, a good realtor, will do that research and make sure that that is the case. I've known of 2 instances so far this week where that has happened to people. We draw up the contract, we submit it to the seller, and these contracts are not 1 and 2 pages long. They're like 12 pages long. There are different addendums that have to go with it. If your house was built before 1978, you have to have the lead-based paint addendum. There's water district forms that have to be completed. There's HOA financing forms. And this is just to name a few. So there's a lot more. We negotiate on your behalf. We have you sign a buyer's rep agreement because we're going to be doing a lot of work for you on your behalf. We want to make sure that you're loyal to us and that we get paid at the end of the closing. We help you keep track of deadlines. There are a lot, depending on your option. It could be a 3-day deadline, a 5-day deadline, 7-day deadline, 10 days, financing in 21 days. These are a lot of days to keep up with. But we keep up with that so that you don't lose your earnest money. Your credit report. If your credit score is 700 or plus, you'll likely get the best mortgage rates. If your credit score is below 700, you may end up paying higher interest rates on a mortgage. And I have my expert here, Regina, who's going to tell us all about credit and how to get our credit scores up to at least 700 before we go trying to get a mortgage. Regina, do you want me to click this or do you want to share your screen?
I can share my screen.
Okay.
I think you have to unshare yours. Or no, let me see.
Let's see. I can stop share, yeah.
Are you all able to see that?
Yes. I heard they made some new updates to Canva yesterday. I can't wait to get in there and check it out. They've got AI in Canva now.
Really?
Yes. So our next presentation might be totally AI generated.
That's kind of scary.
Hey,
Okay, are you all able to see this presentation?
yes, ma'am.
Okay, why is it looking like this? Sorry. This must be the update. 'Cause
I was gonna say probably because they updated it.
this looks different.
Uh-huh.
It has a timer. This is stressful. Okay, so let me try to move. I have it on 2 screens and you're only seeing this edited screen. I apologize. We're gonna make it work.
Hey, that's because they updated it yesterday and you didn't.
Seriously, this is different. If you don't mind, I know we had another name before me. Is it okay if they present or no?
Sure.
This is very different.
Okay, we can give you a chance to figure that out and come back.
Yeah, let me do that. I
Okay.
want to be able to really flow and get the information clearly across without trying
Okay.
to figure out what I'm doing at the same time.
Okay, I'll stop sharing and we'll come back to you.
Yes, there we go. Thank you.
Okay, no problem. Technology, huh?
Okay.
Let's see. Okay, the next one here. Credit score factor, she's gonna go over that, so I'm not gonna talk about that. Danelle Thomas with CTC Me Mortgage. CTC stands for Clear to Close. And
Yeah.
if you're a realtor, you want to hear those words all the
Yes.
time. We have CTC to close.
Absolutely. Those 3 magic words.
Right. Letters, yeah.
All right.
Yeah, exactly. All righty. So as she stated, I'm Dinell Thomas. I am a loan officer / loan processor. I'm with CTC Me Mortgage. We are a brokerage who deal with a lot of different lenders, so we can do pretty much any loan type that is necessary. We work all the way down to a 500 credit score. There's a program out there for pretty much any and everybody. We do the basics, the conventional, the FHA, the VA, but then we also do a lot of non-QM loans, a lot of bank statement, DSCRs, 1099s, where you may only have to provide bank statements instead of actual pay stubs. Pretty much any, like I said, we have a program for pretty much any situation. As she has on the slide here, your mortgage is going to consist of your principal, your interest, your taxes, and your insurance. Taxes tend to run, basically from area to area. They're different, so the taxes pretty much depend on what area you're buying in. Principal and interest, that has a lot to do with your interest rate and the cost of the home itself. That's what's going to determine your principal interest. Then your insurance, there are numerous carriers out here. We always try to get the best rate that we can to keep your mortgage as low as we can possibly get it. Why do you need to use a local lender? I personally like using local lenders just because there's that sense of personalization. They know the area you're in. We were very familiar, like both myself and my partner that I work with both live right here in Katy. So, we're both right here in the Houston area. So we're really familiar with the different areas. And like I said, taxes are a big thing right now. Taxes in Katy, can be pretty high. So we run into someone who's trying to keep their mortgage a little lower. We may say, okay, well, instead of Katy, maybe let's look at Hockley. Maybe let's look at, someplace a little further out that may have a lower tax rate. So to me, that's one of the biggest things with dealing with a local lender. We tend to know, kind of tricks of the trade and of the area that can get you the best deal that you can possibly get.
My reason for using a local lender is that I had a person that was pre-qualified, but she was from another state. And when it come time to close, they told us they don't lend in Texas.
Oh, wow. Wow. And
Yeah.
I have run into lenders like that. They're very state specific. And yet to get to closing and find that out, that's wow. Yeah. That would be a pretty big wrench thrown into plans. So
Yeah, that's why I had to
definitely.
throw that, I had to throw that in there every
I'm
time.
glad you did. Yeah. Wow. I've heard of that, but I've never had it actually happen. Wow.
Mhm.
Wow. And then like she also has a slide up, kind of talk about the different types of loans. Like I said, FHA, VA, conventional, those are the most common, but there are so many different loan types now. Like we can find something that'll fit pretty much anybody's scenario.
So do I need to update this to 500 instead of 580?
Yeah, we actually can go down to a 500. We have a few different lenders who will lend down to a 500 at this point. Now, of course, there are overlays and underlying factors. So we need to speak with, and this is with any loan. You want to speak with the person to kind of see what their personal situation is and see what type of loan will fit their particular needs. But yeah, we are down, all the way down to a 500 at this point.
Wow, that's nice.
Yeah, opens the door for a lot more people.
Uh-huh.
Absolutely. Absolutely.
And then, do you guys do 40-year mortgages yet? I know
We
they
do.
talked about.
Yeah, we do have a few lenders who will lend up to 40-year terms at this point. Absolutely. Like I
So
said, we work with
almost anybody can get a house nowadays.
honestly at this point, yes. Like
Almost.
yeah, almost. Yeah. There's always different factors, but yeah, we have we work with 140 different lenders and they all have numerous programs. So we can find a program that'll fit, like I said, almost everybody's needs.
Gotcha.
Sorry about that. My computer seemed to blink out on me for a second. Yeah, then we're going to talk about the percentage rates. That's going to be the biggest thing next to the price of the home. Your percentage, your interest rate, that's going to determine that's a big part of your actual principal and interest payment. Someone with a 3% interest rate on a $300,000 home is going to pay a lot less than someone with a 7% interest rate on a $300,000 home. And that again comes back to what Ms. Virginia was talking about, credit. And that's all tied into your credit score that you're able to put down. That all just kind of comes together to put your loan plan out there.
Mhm. And all interest rates are not the same. Well, not the same, but you can get a 4.5 interest rate, but it comes with more fees than a 5% interest rate that comes with less fees.
Absolutely.
So you always have to ask for a fee sheet and
Absolutely.
compare it with, the other ones and see which one is best for you.
Absolutely, because everybody's situation is different. So,
and a lot of people want down payment assistance, but they don't realize that they're going to be paying that down payment assistance on the back end.
Exactly. That's what and I've had a lot of people come to me and say, "Oh, well, I definitely want down payment assistance." But then when we talk about it and we get into the nitty gritty, and I tell them, you're always nothing is free. Nothing, you're always gonna pay for it in some way. For a lot of people, down payment assistance ended up not making sense. I mean, you may get this extra money up front, but you're paying 2% interest more than what you would be without down payment assistance. So yeah, again, everybody's situation is different. So I always say, let's talk about your scenario and see what fits you best. But yeah, a lot of people come in wanting down payment assistance and end up finding out that that's not always the best route to go.
Mm-hmm. Can you still see the screen?
Yeah, my screen keeps blanking out on me for some reason. Okay, so we're at DTI now. This is another big one. This is when you're buying a home, you're going to hear this from the very beginning to the very end. Your debt to income ratio makes a huge difference. It really does. Your front end, that includes your, as stated on the screen, your mortgage rent payment, your property taxes, your homeowner's insurance. Then your back end are the debts that you have outside of your mortgage and your rent, your car payments, your student loans, any, credit card payments. So that's all figured into your back end. And those two, they have to line up. You can't have, a 60% front end and 70% back end and get a loan. Usually they want you, like I said, like you have here, 30% back end is the best. That's where they normally want you to stay around. We do have situations where it can go a little higher, depending on the loan type that you have. But yeah, 30% is the target. front end, 20% or less is excellent. That's the preferred. And we do have, again, like I said, situations where it can go a little bit higher. They'll allow for actually likely to go up to, I believe, about 35, 36 at times. But again, like I always say, everybody's situation is different. So we can't just, I don't want to just put numbers out and say that that's where you need to be, because everybody's situation is different. We all have to allow for different scenarios, but these are definitely the target rates. 28 over 36 is pretty perfect.
Right. Okay, and some of the loan products that you have.
Oh, we have so many different loan products. Like I stated earlier, we're doing a lot of the non-QM. So we have a lot of people coming in to do the DSCR. It's a lot of them, a lot of investors are really coming in towards those. We have, of course, the FHA, the VA, the conventional. I'm seeing that in certain parts of Katy, because we do have some parts that are somewhat rural at this point. The credit scores for each one kind of fluctuate, just depending on what type of loan you need. For FHA, we can actually go in, like I said earlier, down to a 500 credit score. Conventional, they usually want you at about a 620, or USDA is right around the 620 also. Non-QM, a lot of the DSCRs, they want you to have about a 660 credit score, but we do have situations where we can go a little lower than that. 660 is that sweet spot though.
Now,
So,
explain DSCR. That's a term that's new to most people.
yeah, that's debt service coverage ratio. That's a loan, like I said, a lot of investors use this particular loan type. What it is they'll buy a property with the intent to rent it out. And that is the mortgage on the property versus the potential rent income. As long as a minimum of 1% higher than what your mortgage is, that's pretty much, you pretty much get approved, as long as you have that, at least that 660 credit score and those reserve requirements. They want you to have at least 6 to 12 months of rent payments, of mortgage payments in the bank. But it's a very easy loan to get. So a lot of them do tend to are tending to get these loans. I've been seeing a lot of this within the last year or so, and it is a very good loan to have for people who are looking to just kind of buy it, flip it, rent it out. That's a perfect loan for that type of situation.
Okay. Thank you.
You're welcome.
Regina, are you ready? Okay, let me stop my share.
Thank you so much. Second time's a charm. I think I got it now. I apologize, everybody.
No worries.
Okay, let me minimize this and put this over here. All right. How does that look for everybody?
Perfect.
Awesome. So thank you again, Vanda, for this opportunity. And thank you for all of the great information for everybody who's presented before me. I wrote some notes myself. So my name is Regina Webb. I am a realtor with eXp Realty. But before I became a realtor, I have been in the credit repair space for 5 years. But before that, I was a person that lived day to day, like most people out there, needing credit repair, needing help, not understanding credit, and paying more for everything. So I became a product of that product. It revolutionized my credit score and my mindset. I had poor credit since college. I didn't understand credit. So because I was able to get my credit together and understand the strength of credit, and understand that good credit opens doors, excellent credit opens doors and gives you great opportunities and saves you a whole lot of money, millions upon a lifetime. So here I am to talk about a roadmap to excellent credit. And it starts with getting your dream home starts with excellent credit. So let's talk about what you need to qualify for a home. I know the The other loan officer gave some numbers about what you can qualify for a home. My mouth dropped when you talked about FHA, minimum credit score. You're able to go down to a 500. The reason why my mouth dropped is I'm thinking, oh my God, how much are they paying for this house? And so one of the things is my goal is not only to help you to qualify, but also to have great credit so that you can qualify for the best rates out there. So you can kind of look and see the numbers here. And let's talk about how your credit is determined. It all starts with a strong credit score. A lot of people don't understand how your credit score is even determined. It's determined by 5 different factors. So those 5 different factors, I have a pie here, and it's just kind of help your mind understand when you're looking at those 3 numbers, this is what is calculated to determine those numbers. The first biggest piece of that pie is payment history. I don't know if your mom or dad or someone always told you to pay your bills on time. Well, this is the reason why you should pay your bills on time, because the biggest piece of that pie, ladies and gentlemen, is payment history. That is 192.5 points out of 850 points is just your payment history. The second piece of that pie is credit utilization. How much credit are you using? You have those credit cards. How much of that credit card are you using? Are you maxing them out? Are you paying them or using them and paying them back? How are you using those credit cards? That is 165 points towards the 850 points. The age of credit. How long have you been having credit being reported to the credit bureaus? That's 82.5 points towards the 850 points. And then your inquiries and credit mixture, both are 55 points towards the 850 points. So be mindful of those inquiries, understanding that can affect 55 points, up to 55 points towards your credit, how it's determined. So let's talk about tips to improve your credit. That number 1, pay your bills on time. Now that we know that your credit score is calculated, let's talk about the largest component. I mentioned it before, but I thought it's so important that I made a whole slide for just this topic to show you how important it is. Your payment history, that's 35% of how your credit is determined. That breaks down to 192.5 points out of the 850 points. So if you're late 30 days, your score can potentially drop once they report that up to 100 points. Ouch, that can really, really hurt. Now, the good side of that is if you've already been down this road, you've already experienced it. I've talked to people all the time and they say, oh my gosh, I was late and I used to have good credit. My credit was 6 something, 7 something, and I missed a payment and it dropped it all the way down to low 6s and even in the 5s because of a late payment. Well, the good news is that we can help you with clearing that up. So tips to improve your credit score. Let's talk about tips to improve your credit score. People like to do things themselves, and there's a lot of DIY things out there. You can absolutely do it yourself, but do it with knowledge, right? The best tips is to hire a professional, right? Number 1, hire a professional. Number 2 is a lot of people like to do things online. I talk to people, I disputed through Credit Karma, or I disputed through my Experian app. But what they don't understand is disputing online. Number 1, you don't have a paper trail. That's number 1. Number 2, you lose your right to a legal right to a word called arbitration. Means if they come back because they're good, they don't want to do their work. If you know how they operate the credit bureaus, they'll just send you something to say, it's been verified and it's yours. Well, guess what? That doesn't mean anything. If you do it online, it does, because now you're kind of stuck. But if you do it legally in writing, using a professional, you now have your right to come back and say, no, we need to look at this again. And you can do that. There's hundreds and hundreds of ways to do that until you get that removed, right? For those reinvestigations. And then also you want to be careful what you dispute, because you could drop your score with disputing certain items. That's what a professional is for. And then also one professional can work with another professional, a loan officer, and the loan officer say, you know what, these certain things I need to be taken care of. And so with that communication, we can work together to help you achieve your goal of home ownership. So why should I avoid bankruptcy? I promise you, the one thing I've learned in this last 5 years is a lot of people think the bankruptcy is the answer to everything, and it is not. It's not, sometimes it is the solution, but it's not always the solution every time. And it could be more detrimental long-term than what you already had going on. So a bankruptcy, depending on what it is, a chapter 7 or 10, a chapter 13 or a chapter 7, this can sit on your credit score for 7 to 10 years, unless you do credit repair. You can buy a home with a bankruptcy, for example, a chapter 13, but you have to have proof of income, a steady income, and you must meet the minimum credit score requirements. So buying after a bankruptcy is absolutely doable, but understand that your interest rates could be very high with like a car and a home. So being able to address these things beforehand will continue to save you money on the long term. If for any reason you miss any payments with a bankruptcy, it could be voided. So all your money, everything is down the drain, and now your assets are no longer protected, things like your house and your car. So now you could be facing a repo or foreclosure. And if you needed to protect that, you would have to start over again. A bankruptcy can also drop your credit score 130 to 220 points. 130 to 220 points. So it can be destructive to your credit, and you still have to work on fixing it. So a bankruptcy should be your very last resort, right? And then most people who file bankruptcy still need credit repair because of the negative impact on their credit profile. So understand that bankruptcy is not credit repair. So I have this question a lot. I paid off my these accounts, but they're still reporting negative. They're still reporting on my credit profile. Understand that paying off an account does not automatically remove the negative item from your credit report. What it actually does is restart the clock to when it's supposed to fall off. So this is why we advise that you speak with us before you pay off any old accounts. This is actually hurting you rather than helping you, and you have a legal right. You have, under the Fair Credit Reporting Act, you have a legal right to dispute those old accounts, those collections, those charge-offs, whatever. That is your legal right. Now let's talk about building your credit, because a lot of people think just repairing your credit is going to be the answer and having excellent credit, and it's not. You can clean up your credit, but in conjunction with cleaning up your credit, you need to be building your credit. So I do offer some resources to help you to build your credit. So these are two types of ways to build your credit. You got your installment and your revolving. We talked about those types of ways. Those are 55 points in that pie. So installment credit is a loan. So something like a car loan, a mortgage, things like that. Having your rental history reported to all 3 bureaus could boost your credit score, potentially 28 to 150 points. So if you are renting, there are services, and especially if you're paying your rent electronically, there's services out there that can help you use your credit history, because we know we don't play with our rent. We pay our rent on time, to build your credit. And then also revolving credit. That's that automatic renewal. So things like credit cards. I educate people on how to use credit cards in order to gain excellent credit. Not only do I teach them how to use credit cards, but if you're not able to get a credit card, I do have resources to help you to get credit cards, secure credit cards, to start building your credit with the knowledge so that we can help you get your home. So let's talk about credit tips for long-term success. So number one, limit the amount of new credit you apply for. That's at 55% again. You don't want to get too many inquiries because then you'll look like you're risky to lenders. So you want to be careful with those inquiries. And inquiries are something that we can address and help get off your credit. You want to establish a good mix of credit. We mentioned that as well. You don't want to have all credit cards and no loans. You want to have a good mixture, a good healthy mixture. It shows lenders that, hey, she can handle a mixture of credit and paying her bills on time or his bills on time. And then it's starting off, if you can, if you know someone that has excellent credit, a family member, have that conversation and ask them, hey, to kind of turn my credit score around, can you help me for a while by allowing me to be an authorized user? I don't have to have access to your credit card. I don't have to have access to your information. Just being an authorized user, I'm able to take advantage of your length of history and your payment history to help build my credit score. I actually helped my brother do this when he first started to help jumpstart his credit score and boost his credit score and turn his credit score around. And now he's no longer an authorized user on my credit profile. It didn't hurt me none. It didn't do anything, any harm to me at all. But now he's able to stand on his own 2 feet and have 700 plus credit across the board just by jump starting me, clean up his credit, and then me teaching him how to use his own credit cards. So how can we help? We do the heavy lifting for you at B-Web Solutions. We leverage the Fair Credit Reporting Act, which was passed by Congress to prevent the credit bureaus from intruding on your personal lives and inaccurately reporting information. Based on that, we are able to dispute any negative, duplicate, erroneous, obsolete item on your credit report, bankruptcies, tax liens, repossessions, foreclosures, student loans, medical bills, collections, charge-offs. It really doesn't matter. Anything negative, by law, you have the right to dispute to be removed, and we do that for you on your behalf. The process is pretty simple. Again, we dispute all negative items to be deleted or be reflected, paid as agreed. We'll pull and we'll do a detailed analysis. We'll do all 3 bureaus at the same time, creating a very quick turnaround. And with us, a lot of people want to know, well, how long would it take? When will I see results? Well, for us, clients typically start seeing results in about 30 to 45 days. We will also you'll get your own portal. I know a lot of people talk about them paying somebody to do their credit and nothing ever happens. Well, in order to make you comfortable and also hold ourselves accountable, we do have portals for our clients. We have portals for our fellow realtors that we work with so that they can see that their clients' progress. So you'll be able to track your progress with us. Also, the services include your credit reports, daily monitoring, text and email monitoring alerts, credit score tracker, credit score builder, credit score master simulator, identity theft protection. I don't know if you know, but every 2 seconds, somebody's identity is stolen here in the US. So we help you protect your identity. And when you get excellent credit, you're more of a target. So we help you with that. And then we also provide $1 million in fraud insurance. And then lastly, a complimentary credit education and restoration. And please note, I need to remove, because it really repeats a lot of what I've already talked about that we provide with an enrollment and services. They're not guaranteed, and this the things that we provide are provided with a subscription, an active subscription. Now, a little bonus, 5 steps to save for your new home, right? Decide your budget. They talked about that DTI. Decide how much you can afford. Our goal, none of our goals, I'm sure, is for anybody to be house poor. So deciding your budget and understanding what you can afford prior to looking at a house, right? And what you're comfortable in paying. And then pay down your debts. The general rule of thumbs is that your house cost should not exceed 1/3 of your total income. And then pay your future mortgage, to practice getting comfortable with paying. So if you're paying $1,500 in rent now and you know your mortgage is going to be $2,000, start paying your rent, but taking that extra $500 and maybe initially putting it towards debt. And then once you pay that debt down, put it towards a saving. So now you're comfortable paying $2,000, $2,200 a month because you've been practicing already. Pay yourself first, reduce your expenses. It is very important to have a debt repayment plan, as a DTI affects how much home you will qualify for, which was already mentioned. And then when you establish a budget plan, part of your budget should be allocated money towards your debts and savings, which I've already mentioned. I went before it was time for me to go. So I bought my house. Now what? Listen, protect your assets. Get your homeowner's insurance. I know we have someone for insurance on here. Make sure you get those things, but also get your will, get your trust and medical and financial power of attorney in place. 60% of Americans lack a will or any type of estate planning. Over half of Americans. So be the different, right? Be the one that gives your family the gift of peace during the time of the unexpected. And we're all going to have that time of unexpected. But every homeowner should have their life, their legacy, their most important and most valuable assets protected with a will, a trust, a medical and financial power of attorney. Give your family the security they deserve by creating estate planning, right? And I do have access to estate planning and my care plan to be able to do that for you and your family. And then fulfilling your dream of home ownership starts with a solid finances and a strong credit score. This is Regina Webb. I thank you for taking the time. Thank you, Vanda, for giving me the opportunity to present. This is my contact information. We'd love to talk about how we can help you achieve your goal. This is my phone number. You can take a screenshot, my email address, my website. You can go check out my website and get the information you need, and then my Instagram, Facebook, and TikTok. Thank you so much. Any questions?
Thank you. I just want to show that this is my, if you can't see it because I got the screen on, but this is my care plan. Can't see it.
Yeah, I see a little bit, my care plan.
Yeah, yeah. So I did get that through you. Thank you.
Awesome, awesome.
Anybody have any questions? No.
Ms. Danelle, can you give me your information? I would love to use you on one of my home buyer workshops as well.
Absolutely.
I'm collecting a team as well of people, resources that I can connect with.
Okay, I will send that to you in the chat.
Thank you.
You're welcome.
So next we have Home Inspection by Angela Austin. Let me see if I can pull this up. Why does my try to put it up here.
I might be able to share my screen. I see a button that says share screen.
Okay, well, let me stop sharing that.
Not that I know what to do with it, because this would be my first time doing this, but let's see.
Hey, we all had our first sometime.
Does it show on your end?
It does.
Really? Okay. Well, I don't know how to put it in presentation mode, so we're just gonna go from there. Let's see. But let me, okay, great. Hi, thank you for having me, Vanda. My name is Angela Austin, and I'm a home inspector. And you're probably wondering, why do you need a home inspection? I can do this myself. Well, Uncle Day, he know how to look at plumbing or electric. Why do I really need a house inspected? Well, we believe that you need your home inspected for the same reason that you would never go out there and buy a new car or a used car without test driving it first. You want to make an informed decision, and we as home inspectors provide you with all the information that you need in order to make a positive, informed decision that may affect whether or not you're going to buy this house or not. We are licensed by the state of Texas Real Estate Commission. We provide both the buyer and the homeowners an unbiased report of the property's condition, informing them about the health and the safety issues and other defects that might affect the value of the property. But make no mistake, we work for the buyer. We are your eyes and ears of what you don't know. What you don't know, we know, and we know how to recommend what to do about it. So that's why you need an inspection. We summarize the conditions of the property at the time that we're there. We point out any major and minor defects. That's one of the differences between one company to another. I have worked for companies where their belief was we're only going to point out the major things that are required. But as a female, I want my customers to know the good, the bad, the ugly, what's major, what's minor, and what might be you can address down the road. So let's go to the next slide, and that kind of gives you an idea. This is the first page of our report, our inspection report. Here again, this is kind of like a summary page. It's going to give you an idea exactly out of all the things that we found, what were maintenance related items, which one were deficiencies. Deficiencies are items that are not up to code. Something's wrong. Those are areas we consider a problem. And how many of those were safety related, which is very important. You want to know that if you're going to buy this house. You don't want to buy a house with safety issues, at least not knowing what those safety issues are. Over here is another page just to give you an idea what the report looks like. This is roofing, under the roofing section. So I don't know if you can see that there's some shingles missing, but as we're doing the inspection and we get to the roofing sections, we are going to let you know here. You see IN, that means it was inspected, okay? And if there's an X there, that's what you want to see, an X there, that we inspected it. Now from there, either we found a problem or we didn't. D means it's a deficiency. In other words, problem. We found a problem. And here in our report, we're going to show you, take your picture of the problem, explain what that problem is, and also a recommendation. Now, keep in mind, we're not roofers. So we're not going to tell you what you need to do to fix it, but we're going to let you know that you need to get qualified professional people in there that know what needs to be done in order to take a look at it and possibly make the correction to fix. What's included in a home's inspection? Well, from the rooter to the tutor, as some people say, from the roof to the foundation and everything in between. The attic, we're looking at the installation levels, we're looking at the beams, we're looking for, if you got hurricane braces, everything that should be up to code, per the code of Texas code, we are looking for to make sure that it is in compliance with state code. We're looking at the exterior. We're looking at the grading of the land, of the terrain, that it's properly draining water off so that you don't have foundation problems as a result of water coming towards your house versus being channeled away from the house. We don't have basements here, but we definitely look at your foundation because, man, oh man, if that over time, that is one of the things that's going to be a major expensive cost of repair. Over time, as your house ages, it settles. But if you have a foundation problems, you'll start to see cracks in the wall, doors won't close. I've even walked into homes where they slope. I mean, literally one end sank so much lower that you could roll a ball and it will just continue to roll down. So these are things that we're looking at, notating, and bringing to your attention. All right, when should you get an inspection? Okay, so, you know, you got your approval letter, you've gone out with Vanda, she found you your perfect dream home. Soon as you put that offer in is when you should be contacting an inspector. Be it new or new construction. So have that when you are in the process and you've signed a contract with your builder to build a home, we call it a 3-phase inspection, but technically I like to say it's 4. When you're building a new home, we come in and phase 1 is going to be, we're going to check to make sure your foundation and your slabs are poured correctly. We have tools to measure to make sure that all is appropriate, that the proper piping is coming out properly, and we actually, even though the city comes out and does an inspection, we inspect what the city does as well to make sure that everything is in code and properly done from the very beginning, because if you build on top of a bad foundation, we're talking about problems after problems down the road. Phase 2 of a new home construction inspection consists, once the house is framed up, we're going to come in, take a look, make sure that the woodings are properly spaced, the braces are in place. That's basically what phase 2 is going to consist of. Then phase 3 is going to be after the wiring and the plumbing and your ductwork has been put in. And like I said, I like to call it a 4-phase, because I want you to, I want to come back before you close on that house. That final walk inspection, that walk-through inspection, that's when we'd like to come in there and do for and assist you, so that we're going in making sure before you sign off and close on that house that they've addressed everything that needs to be addressed, or at least you've got a list of things that need to be addressed before you comfortably close on that house. This is just some of the technology that's out there that we're using now, the company that I'm with. Now, you know, I'm a woman, I'm 61 years old, I'm retired. I'm not getting on top of your roof, but I will send a drone up. We've got drones that will take aerial shots of every nook and cranny of your roof, and we will be able to provide you detailed information and show pictures. Those drones take pictures of exactly what the problem is. We have infrared cameras that can see behind walls. A lot of times there, without a lot of this technology, you could have a water leak behind your drywall that may never become apparent for months. And let's say the inspector goes in and they don't have some of these tools. You'd never know until after the inspection is done. You've closed on your house, you done moved up, you know, all your goods and furniture, and then now you see water puddling at the base of one of your walls. Well, with technology and equipment like the infrared cameras, we're able to see moisture behind walls that help us give a better inspection and to better keep you informed of what's going on. And that third one here, that's what we call a zip leveler. With that equipment, we're able to put it in each of the home's rooms and determine the leveling of your foundation from any room. We even use that particular tool at the phase 1 foundation at the start of your foundation to ensure that everything is properly leveled. Some additional things that isn't normally included in the cost of your inspection, and that's is a pool inspection. That's additional service that can be added on. Termite inspection, septic tank inspection, environmental soil and water testing, mold and lead inspection. Those are some additional things that can be added. Also, right before you, well, before you let your warranty expires is another area when you want to make sure that you hire a home inspector. So you've got your phase, new construction, you just purchased a used home, so you definitely want to use an inspector at that point. And before your home warranty runs out, either the builder provided one when you new construction, or you might have purchased or was giving a home warranty when you bought your used home. We want to come in at that point as well and do an inspection before those things expire. And we also like to tell buyers or sellers that before you put your house on the market, have a home inspector come in and do an inspection. That way you know what needs to be done to that house. You can probably get it cheaper, fixed, repaired cheaper than the buyer coming in telling you, I need you to lower the price of the house because we got all these items that we found wrong with it. I would rather go in and have those items done, repaired to my specifications. I know how well the job has been done, and that's not even going to be an issue that's going to show up on an inspection report. So we also recommend that the seller does an inspection, orders an inspection before they list the house on the market. Yeah, that's pretty much what we do as inspectors and what the report looks like. Are there any questions?
I'm glad that you changed companies because I like what you just showed better than the previous ones.
I'm glad that I changed companies because I didn't realize being trained under one company, the way one company does business, how inspectors can cut corners. I worked previously for a company that cut a lot of corners. They went strictly by the book. If it wasn't required, they didn't do it. We're not required to do a lot of things. For example, we're not required to move your furniture around to get behind something to check to make sure that electrical outlet, if it's covered by boxes and all kind of things. But we do things over and above what the standard track report, what's required by the state to do. And man, what a difference it is working for this company versus the other company. So yeah, your selection in inspectors does make a difference.
Yes, it does. I would send her some inspector reports and say, look at this one, check this one out, check this one out. So she saw that there were different types of inspectors out there. And so now she's with one that uses all this great technology that we have.
Right. And there's our information if you want to know how to get in contact with me or either Daryl, the owner, and who's also an inspector. There's our phone numbers, there's our website, as well as the name of our company. So call us anytime. We can sometimes within 24 hours and sometimes same day get an inspection done on the same day.
Great, thank you. Anybody have any questions?
Okay, then I'm gonna mute me.
Okay, take your screen share off. All right, Karen, you are next. Is he still there? Oh, yeah, okay. Let's see. We're on protecting your assets now. Let's see. You want me to pull the presentation up or do you have it? You can do either way. Are you on mute? Can't hear you. Well, I pulled it up. I can't hear you though. Is there something wrong with your mic, you think? Well, I heard you earlier. Let you know we are live and in color. You're on mute now. I see your lips moving, but I don't hear anything.
Looks like he's muted. Like,
Well, he took himself off mute.
okay.
Well, Heron is our insurance partner. He's with Goosehead Insurance. They're one of the largest independent agencies in the US. I'll just kind of go through your slides until we can hopefully get you back in here. These are some of the carriers that they use. First and foremost is our agents. They review coverage for you, give carrier and coverage options, and recommend the best choice for your consumer needs. Of course, they specialize in home insurance. They help protect, and insurance, of course, protects your property from damage. We're down here in Texas, so it floods sometimes, you know, fires happen, tornadoes happen. So we definitely need to protect our asset because we know the home is the largest asset that we're going to have in most cases. So there are 3 forms of homeowners insurance. We got the basic form, the broad form, and the special form. I don't really know what they all are. Okay. Basic is fire and lightning, all the way down to breaking of glass, constituting a part of a building. And then broad is falling objects, collapse of a building. Wow, that's really big. Sudden and accidental injury from artificial generated current to electrical appliances. And then special is all perils except earthquake, flood, war, nuclear accident, and certain others. And I think he's coming back in. He's in here twice. So they also cover things like jewelry, furs, firearms, rugs, coins, stamp collections, things like that. Silverware. Things needed, need to have the things appraised. We have receipts and pictures of each of the items. So what I like to do is take pictures of all of that stuff and put it somewhere because, you know, somebody comes in and steals your furs and your firearms, you want to at least have a picture of it and proof that you have it, because a lot of times you may not still have your receipts. Factors used in the insurance premiums, it's the same as factors used for getting a loan. It's the location of the home, the value of the home, what is it constructed of, the distance to the nearest fire department and water supply, and the value of the deductible. We know the higher the deductible, the lower the premium. And they do offer discounts for multiple policies if you're bundling with your car insurance, new home purchase discount, credited builder discount, protective devices such as alarms, and I'm sure video is on there. And if you have a new roof, houses with older roofs, their insurance is going to be higher on that house. And then, of course, it's flood insurance. And who is at flood risk? All property owners in all zones. Everywhere. People is flooding places that's never flooded before. So you can never say, oh, it doesn't flood here. You say it hasn't flooded here yet. So every area in Texas is rated for flood. We have different zones. So you have the ability to choose the amount of your coverage, and the waiting period for most policies is 30 days. Except for new home purchases, it's effective immediately. Well, that's good. Good to know. And then if you want to look at the FEMA map, there's a link here to the FEMA Map Service Center. And here's the flood pricing. So you see, as a $250,000 building, the annual price is really not that high. So I would definitely get flood insurance. I don't know why it goes just to 250, but we'll have to maybe update this and go up to 500 and see what that is. And they also do utility concierge. So I don't know what happened here, and Mike, it just kind of went out on him, but this is how you would get in touch with him, his direct line and his email. Thank you, Heron, for that great presentation.
Can you guys hear me?
Yes.
Oh, my apologies. My apologies. I'll be very brief. Thank you, Vanda, for stepping in. I don't know what's going on right now.
Hey, technology, you know.
Yeah, it's always funky. But yes, I am with Goosehead Insurance. We're one of the largest independent brokerages in Texas. We could definitely help you with all facets of insurance. We're definitely coming up on flood season. That's one of my big conversations, is always talking about flood insurance. Every home is in a flood zone, so we have to always be aware and at least have some discussions about flood insurance. I am available. You can contact me. I'm wrestling with my kid right now. You can contact me directly. Vanny could put my information up, email, phone number. I am available 24/7. Thank you, guys.
Your information is up there. Does anybody have any questions for Heron? Okay, well, thank you. I don't know what happened with that technology, but maybe you had to deal with your baby. Okay, let's see now, how do I get out of this one and get back to the other presentation? Let's see, stop share. Let's see. Nope, that's not it. Now I'm having technical difficulty. Find it. Oh, wait, here it is. Okay. Okay, that was about insurance premium. We won't talk about that. We just talked about that. Okay, so basically, to summarize, we have steps to home ownership. Meet with your real estate professional, determine your budget, save for your down payment, at least 3 to 5%. Check your credit score, get pre-approved for a mortgage, start house hunting with your realtor, make an offer, get an inspection, close the sale, and move in and celebrate it. I believe in manifesting what you want. So I definitely think that the power of manifesting, if you can visualize your dream home, you can have it. You may not be able to get it in 2 months. You may not be able to get it in 6 months, but you just keep working toward it. It's a process. You will definitely get it. If you have to get a part-time job, sometimes you need to do that. If you need to save money instead of eating at Starbucks every day, you know, getting a $5 coffee, saving for it, you can do it. That's something you really want. And here's my information. I hope you enjoyed this information. And I can be reached at 773-678-1085. And there's all of my social media channels: Instagram, TikTok, Facebook, LinkedIn. Seems like I got a couple of other ones, but that's enough for now. Don't let the mortgage process stress you out. We're all here to help you navigate with this, and contact us today so we can help you achieve the dream of homeownership. Anybody have any questions? No? All right, thank you guys and have a great rest of your day and I'll talk to you soon. Bye.